All right. And the third big thing to share with you this month is the half two real estate market predictions. So I wanted to share with you all what I tuned into for the mid-year bold predictions webinar from Brian Buffini. For anybody that doesn't know Brian Buffini, he is known as a real estate icon and legend in the industry over the past 40 years. He is the chairman and founder of Buffini and Company, which is the nation's largest training and coaching organization. He also has a podcast. It's called Brian Buffini Podcast. It's a Good Life. I highly encourage everyone to listen to an episode if you haven't already. He not just gives great real estate advice and kind of talks about his story and coming to real estate, but also just great life advice and coaching and counsel. I've certainly taken away a lot from. So anyway, I'm going to read to you guys some of the statistics that he shared as he predicted what the half two of the real estate market was going to look like. Pending a lot that can happen, not just interest rates and what's going to happen, but also it's a political election year. So things can always be a little bit up in the air when it's an election year. So he did his best. So here's what I'll share with you. The first statistic is 37% more inventory and homes on the market right now versus last year. And that's across the United States. Obviously there's a number of reasons for that, but obviously with increased supply, demand has not stayed with the supply increase that we have seen. And that's likely due to the fact that people are less inclined to buy homes when interest rates haven't been great. We've seen interest rates in the mid sevens, up until about a month ago, and it started to drop down into the sixes. But there's no surprise there that people are less hesitant to maybe give up their interest rate to make a change in their life and maybe downsize their home, or they're investing in an additional piece of property. If they're going to give up an interest rate that is not as good as the interest rate that they're going to go and be forced to get. So there is an increase in inventory and homes on the market right now versus last year. When you look at total real estate sales for the year, Brian kind of models out, hey, typically between the months of January to March, so the first quarter of the year, 40% of the real estate business is done buying and selling in the first 3 months of the year. And that's the lion's share of the year that happens. So as you get through the winter and start into the spring, people are ready for a big change in their lives. So they're making all the necessary, steps to get ready for the spring and be in their new place. June to July, 20% of the real estate business takes place. And then October through December, 25% of the real estate business takes place. And then the months in between makes up the balance of whatever is left. But an interesting stat that he shared was this year, the winter months and the fall months are inverse and have flipped. So instead of 40% of the business happening in January through March, only 25% of the sales happen this year, likely due to the interest rate impact. So we saw a slower start to the year than we do on a typical calendar year, but he expects that the fall is going to match what the winter usually does. So October, November, December, typically we see 25% of the business done in the market. He's expecting to see 40% of the business done in the fall this year. So what does that mean? I think it means a couple of things. The first being all indicators are pointing and have continued to point in the direction that interest rates are going to continue to fall. They have in recent weeks. I talked about that in my second biggest thing, but you're starting to see the Feds slowly slash interest rates down. They're not huge swings, but they are gradually starting to come down. And Brian's predicting that you're going to see that continue. I think that that's going to have a big impact on whether people are going to decide to get off the fence or not. meaning, hey, maybe they've been holding on to their home. They're not sure if they can get the right price for it. They're going to wait and see what happens with the federal government and if the interest rates are going to continue to get cut. And also, is that going to bring the right amount of buyers into their listing? Very, very fair things to consider. Brian has predicted, hey, I do see interest rates continuing to come down into the sixes, but if anybody is waiting to see interest rates back in the high twos to threes or maybe even low fours, those days are gone from 3 or 4 years ago. It doesn't mean that they won't ever come back, but we may not see that again for 20 years. Is it realistic to think that you might be able to get into the fives on a 30-year fixed at some point in the next 12 months? Maybe. But realistically, he predicts that interest rates are still going to be in the low sixes as we finish 2024 and we head into spring of 2025. He does expect that the federal government's going to make an interest rate slash in either September or November, which is obviously going to contribute to the market picking back up. And then he expects a bigger slash to happen in the spring of next year, spring of 2025. So I would say ideally, we break the 6% barrier this year and maybe we get into the high fives, but the reality is you're probably going to see interest rates still hovering right on the border between 5 to 6%, depending on what you qualify for in the remainder of 2024. Continuing on. One thing that I would share as well regarding interest rates continuing to move in the right direction and 40% of sales happening in October, November, and December. Right now, we talked about how there's an inventory surplus. There's 37% more homes on the market right now versus last year. And that's for a multitude of reasons, but interest rates play heavily into that. So you're seeing much higher on average days on market for listings. You're seeing a lot more price reductions happening on listings after 35, 40 days. The month of June historically was one of the highest it's been in years with price reductions. 15% of all listings ended up canceling in the month of June across the industry, which is the highest it's been in years. And you saw a large amount of listings that had price reductions happen in the month of June. So what that means is homes are sitting on the market for longer than usual, and generating buyer interest is taking a lot longer than it did a year ago, 2-3 years ago, certainly faster than COVID times, when offers were coming in. Listings would go live within 3 days. They're going pending, full price offers or cash offers, over cash offers, or overprice list offers. Just insanity in the market. That is not what's happening right now in today's market. That being said, as we head into the fall, if we expect the average business to double in terms of October, November, December timeframe, right? As well as interest rates are going to continually to gradually go down, that's going to create increased demand. So for those that may be considering selling, it's something to think about where right now the buyer pool may be very limited. They may not be getting offers at full price or at least the price that they want. And some listings are having to be canceled or taken back off the market. Right now, there's not a ton of demand and there's not a ton of competing offers from buyers. However, if you move into the fall and you wait until the interest rates get cut, what do you think that's going to do for everyone else that's waiting for the exact same thing? Everybody else is now going to put their house on the market. That's going to create increased competition. So if you are the only home on the block for sale in the month of June or July, you may be one of 5 homes on the block that's for sale in the months of October, November, December, and it's going to create this increased demand and competition, which may not result in getting the best price for your home that you can. It's not to say that you won't, but that is something to consider. So being ahead of the curve and taking that into account before you start to see a major interest rate slash or cut from the feds, or whatever may happen with the election and the impact that it has on the economy. My encouragement would be, don't wait to get off the fence until everybody else gets off the fence. Don't be in that reactive mode. Proactively wait and determine when the right time is to make that jump. You'll know it when you see it, but be ahead of the curve. Don't wait for it to happen. Another interesting statistic, rentals. Rent prices have increased 30% since 2020. Renters say that they are spending between 30 to 50% of their income on rent per month across the United States. I was always taught from my father, who was a real estate agent and a broker for over 40 years in Oregon. You want your income to debt ratio to be no more than 25 to 30%, meaning I have a mortgage on my home. I'm not paying more than 25 to 30% of my monthly income on my mortgage. That is a lot of money to be paying to someone else and not have equity in your home. Right now, first-time home buyers, average age is 35 in the United States, and it accounts for 1 of every 3 real estate transactions happening across America. So he additionally shared that right now, the average age for Gen Z population moving out is age 26. That represents 68 million individuals in the United States. Millennials is 72 million individuals in the United States. So he called it a household formation, where age ranges between 26 at Gen Z to 35 at the millennial age represents 45 million people that will continue to represent the largest age range and portion of the buying market for the years to come. So I thought that was a pretty interesting statistic, but I also take that as, affordability right now is not great. But it's very, very important to focus on, if you can and you have the financial ability to, get out of renting and get into home ownership, even if you're a first-time home buyer, as soon as you can, to start building and accumulating wealth. He shared another statistic that homeowners versus renters net worth is 400x for a homeowner than what it is for a renter on average across the United States. So if that puts it in perspective for you, pretty compelling. And then he left with 3 big calls to action, which is, hey, we've been seeing an 11-year run-up in the industry since 2013 until present day, which has contributed to a lot of things that were reflected in the NAR lawsuit settlement. Inflated values on homes in the industry, bad skills and bad practices across the real estate industry. And there is a significant need to restore a high level of professionalism in the industry. And I couldn't agree more. Obviously, I'm new into this business, but I did grow up around this business with my dad. I always had a ton of respect for the way that I felt he handled himself, and how professional he was with all of his clients. And I heard that from his friends. I heard that from his colleagues. He always treated the client with the utmost respect. And I believe that that's what continued to help him be successful. And it continued to help him get referrals from the people that he helped. And I really want to model my business after that, and I want to have the same core set of values. So what I am doing and what Brian Buffini is offering is a certified full service professional program course that he is offering to any real estate agent in the country. It is a 2-month long course that essentially is going to help restore some of the lost practices, values, and skills that we're seeing in the real estate industry right now. I think it's an excellent opportunity and program to offer to agents that want to separate the best from the rest and restore that level of professionalism, because at the end of the day, that is what the client, that is what you as the consumer deserves. You deserve to have a full service experience, a professional experience with someone that is going to be an advocate for you, is going to negotiate for you on your behalf, and is ultimately going to treat your sale or your purchase like their own. So that's going to be my commitment to my clients and customers. I am going to start that course here at the end of the month. It's going to be a designation on my tagline, on all of my business cards, on all my email signatures. It will say certified full service professional, which means that I've had extensive curriculum and coursework to raise my level of professionalism as a real estate agent and offer those services to my clients. So I am looking forward to that. And that is the third big thing you need to know.